Good morning, June 7th, and the market is showing some signs of life. Weekly changes this week. July corn down 1 cent, but pretty much all the other grains higher. July soybeans up 14 cents. July Chicago wheat up 21, Minneapolis up 10, and actually August feeder cattle making new all-time 6,000 year highs this week. The fat cattle strong, up 11.33. July crude oil up 3.79. You see the message here. August gold up 31 bucks. And the dollar suffering just small losses, but the dollar continues to decline. When we look at these charts, there's a lot of things pointing to more prosperity in the United States, and actually, it's inflation in the commodities. The Dow also up 515 points. It actually continues its rally. So we've got a lot of things happening, but I want to look at crop progress before we look at the charts. Corn 93% planted. That's now equal to normal. But our early planting season ends up with 7% unplanted in June. 7% left to be planted of corn in June. That's late. 69% is rated good to excellent. That was up 1% from last week. And our yield model jumped 0.3 bushel, but it's still below trend. Below trend in spite of very, very early planting. This crop got off to a very, very ragged start. All kinds of replanting claims coming in for wind blowing it out, freezing it out, all kinds of problems, drowning it out in low spots. Soybeans are 84% planted, still 4% ahead of normal, but 16% remain unplanted here in June, and we have very wet weather down in the Delta. And in some of those areas that double crop, they may not get those soybeans in. 67% rated good to excellent. That is a below average rating. Our yield model, first yield model of the year, showing 51.05 bushel, below trend by almost a bushel per acre. Not only that, if you look at USDA's projection, which is below our trend projection, it is almost 1.5 bushel below USDA. This is very bullish because we only have 290 million bushel projected carryout in soybeans with the 52.5 bushel. Take a bushel and a half away from that, 80 million acres plus, you've lost another 120 million. So you go from 290 million carryout to 170 million carryout. That's right now because we have a below average soybean crop coming, and we're having problems planting the last part of it. And we planted it in very soggy conditions in much of the country, and we got off to a ragged start. So this is a very bullish situation. If this soybean situation does not change, if we do not grow out of our funk like most of the market thinks, we're going to have a very bullish situation in soybeans, particularly if this yield model, 51.05, drops further. If we drop another bushel, we have a $15 plus soybean situation. That is going to be very critical. Actually, I'm bullish soybeans. I think that you can buy soybeans and use a relatively tight stop here, but I think that soybeans have the potential to go up $2, $3 or more, depending on what this crop is this summer. This is a very bullish situation in soybeans right now. And actually, what's going to trigger the market's excitement about it is if that soybean yield projection continues to go down this summer. That is a very critical situation. I'd rather be long now and see it make that yield go up and save the soybean, carry out situation. Then I can liquidate my longs, but I don't want to not be in that market. Hard red spring wheat, 90% planted. We're still 5% ahead of normal. Only 50% rated good to excellent. That is 5% higher than last week, but that is a pathetic rating for spring wheat. Winter wheat condition, 52% good excellent. That actually improved 2%. That took a lot of the bullish edge off of winter wheat because we were declining this yield model. Now we're back up to 53.18 and an increase of 0.38 last week. The western rains and the tri-western areas was bearish. Topsoil moisture, 76%. Adequate surplus, that was down 1%, but that's lower than last year's 85%. Subsoil, 72, that's equal to last week, 83 last year. We're below last year's soil rating, but we've been very wet in a lot of areas. Let's look at these charts. Look at corn. Nothing bullish here. In fact, we have new recent lows this week, but I would like to buy back corn sold in 24. The 24 crop, I think we're 85% priced of that 24. I think below 440, which we hit this past week, I think we should be buying corn back. And actually, if we get down to this recent low around 420, we should have all of our corn bought back that we sold on 24 crop. I think we're getting ready for a bullish run in these commodities. But it doesn't show up in corn because corn is the most bearish of all of the markets at this point. If you look at soybeans, I talked about soybeans. You got higher lows and again a higher low. This market is starting to go higher. And quite honestly, we have a meeting Monday between a Chinese trade delegation and a U.S. trade delegation. And actually, if they come to some agreement and of trade with China, China will agree to buy more soybeans so they can get access to our market. That's the agreement that's going to eventually be made. The Chinese have no choice. They make that on Monday, these soybeans gets bullish very, very quickly, particularly since we have no carryout. We only have 170 million carryout at current yield projections. And the charts are starting to show that bullishness. Wheat rallying this week and showing gains in Chicago following spring wheat. But I think the wheat has bottomed and we are heading higher. Although the fundamentals of wheat aren't as bullish as soybeans, they're starting to turn bullish as well. And you can see this in spring wheat more particularly, a pretty steep uptrend right now in spring wheat because of those very, very poor ratings early this year. Crude oil, starting to see some price rally. It looks like there'll be no end to that Ukraine war soon. That will be a 10-minute presentation in itself, but that is very bullish on the crude oil side. And the dollar index, we're coming back and testing these lows. This dollar decline increased the possibility of soybeans going higher a lot because we dropped 10% here in the last 4 or 5 months, basically since January. And we continue to taking this dollar lower. And really, there's no reason it shouldn't go to new lows because the United States is not going to balance their budget anytime soon. It's a disaster. It's going to be a debt default. So the dollar does continue to need to go lower, and that's bullish. And the last thing, Dow futures are rising in price. You kind of see the overall support in markets, especially U.S. markets. This is a feeder cattle running to new all-time 6,000-year highs in the feeder cattle as well. So we've got a bullish situation developing. And finally, the gold market. Gold has kind of had a correction here, but if gold runs to a new high, that's going to be further signs of a bullish development. And weather-wise, I talked about weather. It's wet. Here's a problem for winter wheat country. You've got pretty heavy rains forecast basically this weekend and into early next week in Oklahoma and Texas. 3 to 5 inches isn't what you want at harvest time. And that's going to continue to delay some of the planting here, as well as double crop planting of soybeans in the southern part. So a relatively wet week this coming week. This is the next 7-day rain forecast. The 8 to 14 precip outlook continuing wet here in this area, but actually starting to see some dryness emerging from the west. And here's a deeper problem. If you have wet conditions when you're planting, wet conditions when the crop is emerging, soggy, drown out, wet soils, so roots don't develop well. And then you get heat and dryness developing in the summer. About June 15th, if the weather will change to June 15th to a drought, that's about the most bullish situation you can have. So we're going to have to watch for developments like that are going to be a bullish development. Because quite honestly, we're setting up these markets in a somewhat bullish situation right now. And the lead market of that is soybeans, where you have a below trend yield developing, a bushel and a half below USDA, takes us down to a very tight carryout, 170 million bushels or so, tighter than 200. And no one in the market realizes it. You're already seeing buying take place. We're seeing trends turn. And the Chicago Board of Trade people are continuing to recommend everybody sell, sell, sell. The same thing as the last 3 years. Well, things might be changing. And it's very, very interesting to see, at least on the technical and fundamental side, a bullish situation developing in soybeans. And if this crop continues to go backwards or even stays where it's at, or particularly if it goes backwards, if we develop even a threat of some drought at some point this summer, when you have a crop that has poor root development, you could set up a situation where things get very bullish very fast, particularly if we start making trade agreements with big importers like China. Those are some very, very interesting developments. I would look to buy back sold corn at this point, and maybe we should buy it back in soybean call options, because quite honestly, we have a situation in soybeans with the right weather. It could develop into a very, very bullish situation very quickly. So a lot to think about, some positive developments here in the markets, actually not just grains, but spreading into livestock and into all the other commodities and stocks as well. So hope you have a great weekend and good marketing.